Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is pre-market prep for Thursday, February 27th. And so, I am pretty excited to be, going over the charts. I did just put out a video on Lucid Motors. Believe it or not, I think this is still going to be coming down, and that is not a personal opinion. That is based on doing research. Looking at unusual whales data. What's up, James? How's it going? Good morning. And yeah, so I'd really recommend checking out that video, dive into the unusual whales data. There were some pretty big trades, multi-million, I guess in total multi-million, but there were million-dollar purchases of puts yesterday. That suggests this will be going lower, and that I find that to be very similar to the type of video that I did. Let's see, actually, I'm just going to pull up, let's see, the channel. Just to mention this, so the video that I just put out, Lucid and Gravity. So Lucid Motors has driven off a cliff to $1.50, and that is what Unusual Whales data is suggesting. And that's really just kind of following up on this video, multi-million-dollar trade from SoundHound's Unusual Whale. So millions of dollars were made on a trade with SoundHound that was recently closed. And so I think that I've spotted something with Lucid that, was just opened. So believe it or not, I think that Lucid Motors is still going lower. I definitely encourage checking that out. I just think there's some great information on Unusual Whales. I really like that. I think it adds to the chart. And yeah, I think it's a nice way to hedge as well if something's going down. Even if you're long, good to be safe in that sense. But yeah, I am going to go over the usual tickers, and then I will dive into Airship AI, Unity Software, Wolfspeed in just a minute. I have to say, I was thinking about doing a Unity Software video yesterday, but the last one that I did, I'm just going to retract from getting into the UVIX. The last Unity Software video that I did was Unity Software is in the dip. It was in the dip, only got 94 views, so I was just a little discouraged to do another Unity follow-up. But yeah, I think there is some interesting data there, so I will get into that. I'm just going to try to get over good audio, good, awesome. Yeah, so I'll just go over the usual tickers. And SoundHound, since you did mention, I'll maybe go over that towards the end. I'm a little all over the place. I'm just excited from that Lucid video that I just did. And so, yeah, getting into the UVIX data, we did close at a price of $29.52, being down 4% yesterday on the day. And in the pre-market, it looks like it's down about another dollar, trading at around $28.50. And so, I got my little doodle here in the green box. We did get a move up to the high from February 25th, which is at $33.75. I think, as the thumbnail of the video suggests from this post from Greg, that, we had this nice opportunity to buy the dip when the VIX was, spiking up. And now that the UVIX is pulling back down, I think it could be returning to around 2742, this level that was a gap that has since been filled, maybe coming down to this 618, which is the extension over here at 2673. But bigger picture, we have been trading in this downtrending channel for quite some time, and parallel channel. And so getting back to the base of that channel would be coming down even lower than 2250. But if we do see, markets really start to rip going higher, I think that we could be seeing some nice dips in this around 26, maybe 25 or lower. So good to keep that in mind. But then I'm just going to switch over to the 10-minute time frame since there is pre-market trading with the UVIX. We did see we got to a low of 2807 yesterday during market hours, then bounced up to that high of $31.37. But just lots of volatility here, and we did see a fade actually in the after hours yesterday, a bounce into the pre-market, but now a fade. So, I do think that taking a step back, I do think that we will start to see this cool off, but maybe we could see another spike in this green box that I've drawn up there. Totally being honest with you, that's just an arbitrary green box. But, in this green box over here, we saw a couple spikes before fading lower, dip buying opportunities in this red box before, maybe we see another spike before we get back into another red box, dip buying opportunities. And so, these boxes are really just arbitrary, just about 2-week long periods of where I think that there's some volatility to the upside and then cool off before another 2-week round of some spikes. But let's look over at the VIX, which is the Market Volatility Index, and this closed yesterday at a price of $19.10. We did hit a high on the 25th of $21.48. We have been testing this light blue uptrend that had acted as support over here, now acting as resistance, with our initial rejection on the 24th, piercing that level ever so slightly before pulling back, getting another pierce of it, but getting a rejection, putting in an inverted candle with a big wick to the top side. That does make me think that we will be cooling off, maybe coming down to, if not lower than, these moving averages here. We got the 50, the 21-day, and the 200-day ranging from, really all just being right around 17 to 1640 or so. And I do have this blue line down here that was a gap that has since been filled. That would be around 1485. So do look for this to cool off, but it's quite possible as we do cool off, maybe we get another bounce and some more moves up to above 20. But like yesterday, we moved up to 20. We hit a high of 2006. We got rejected from there. And so I think that we are seeing a cool off, and there's no volume over here for the VIX. So maybe I want to switch back over to the UVIX. But yeah, as we're putting in these highs for this green box, the shaded region, the volume is going lower. So, I think that's kind of not necessarily a bearish indicator, but I think that that's a topping signal. This will be cooling off. So good to keep that in mind. I'm just going to switch back over to the VIX to look at the 10-minute time frame. Maybe, this, you could think of this as like looking like a bull flag or something. But overall, looking at that volume analysis from the UVIX, I think that this is probably going to be heading lower. Maybe bigger picture, we have a downtrend from over here. And, maybe we break out above that, but we might get a cool off maybe to right around 18. Before making another attempt to get higher. Let's just see what that looks like on the daily. So yeah, that line that I drew, that's pretty insignificant. So I'm actually going to delete that. I think we need to see a cool off maybe towards the end of the week. But anyways, following that, let's look over at the SPY. This is the S&P 500 tracking ETF, which closed yesterday at a price of $594.54, effectively being flat on the day, but going up nearly $4, over 0.5%, going up 3.68, nearly 3.69 dollars in the pre-market. And what we see here is, I think that we've probably found some support around this 618, getting a little bit of a bounce there. We did wick down to that level on the 25th, hitting a low of $589.56, looking like 590. Was acting as support. We did get some closes right around this 50% retracement, right around $594 a share. And I think that we're probably going to go on this green pathway higher. I don't think that we're going to go down here. Or if we do, I think we need to see a bounce. Maybe we see a gap down into next week. But I think it's kind of by the dip territory. And so what are some levels on this that I can omit? Let's see. I think actually all of them are pretty good. I think they're all pretty fine levels. A little bit cluttered here, but I do think that we are holding these as support. Maybe I want to remove that 786 because I don't think that's necessary, at least not for the time being. I can always add that later, but let's flip over to the 10-minute time frame so we can see how this traded. Really over the past couple days, I talked about that 618. We did get a wick down to it, even on the 10-minute time frame, just a wick down to it, close above. So that was on the 25th, testing that 618, and then we bounced, getting up to closing the day right around that 50% retracement. And then yesterday, on the 26th, we did get a breakdown below that 50%, but then we reclaimed it. And so, I think this is probably going higher. And these are just the doodles that I drew, so they're not really that significant or anything. But I do have this orange downtrend as well as this blue line, which was a gap that has since been filled. And so looking at those levels, yeah, I think that we could be getting back up to, let's see, $600. Let's see if we close the week over the next couple days above $600. We do have the 50-day moving average at $598.36, just below $600. And then above that, we do have the 21-day moving average at $603.70. And really, they're just being a confluence of levels between, really just like 600 plus or minus $2 or so. I think that's going to be an important level. We can see that light blue downtrend is based on, these 3 pivot points to form that parallel channel. We will see if we can get up and reclaim that level. Maybe we get a little bit of a rejection, as I have doodled in this green line, to test that 50% retracement as support yet again before getting above that light blue downtrend and forming new all-time high. So we will have to see. But let's flip over to the SPX. This is the S&P 500 index, which closed yesterday at $5,956.06. Again, effectively being flat, just like the SPY. And it does look like over here we did pierce the 618, just like the SPY, closed what looks like 2 days below the 50% retracement there, also getting rejected from that 50-day moving average. But just like with the SPY, we have this confluence of levels above us, and really that range between the 50-day moving average around $6,004 up to the 21-day moving average around $6,054. So we will see if we can bounce up to that light blue downtrend, reclaim it as support, and continue higher. And, while I do have this circle there, I am going to, just like I did with the SPY, remove the 786 here so we don't have that to the downside. I do think that we have found some support here, but maybe we do see a gap down into next week. So good to be prepared for that. I'm just going to flip over to the 10-minute time frame so we can see, no pre-market or after hours trading with the SPX, but we did, just like I showed with the SPY, get a bounce from that 618, and then we did reclaim the 50%, although we broke below it, but I think that we might be reclaiming it into the trading day of today, Thursday. But now let's flip over to Bitcoin. This one might be a little bit more exciting, and this is one I'm actually really interested in because, just like over here, we formed, like where I drew this purple line right around $92.6 thousand. As we can see, that was an excellent dip buying level when we were trading in this range up here. Of course, we have broken below that level, but what I am very curious about is, another dip buy level, another purple line like that. And so, I could draw that based on the low that it looks like we have hit from this pullback, which was around $92,144.77, give or take, depends on the exchange you're looking at. But if I were to have placed an order at that price or at 82,000, it would not have gotten filled. So that doesn't really seem like a good dip buying level. But what I think does seem like a good dip buying level is going to be right around 83,000. So if we are to test, this wick low that we saw, if we are to trade in a range just like we did over here, I think that new purple line might be $83,000. So I'm just going to mark that as a purple line. So we do have that for reference. Maybe we don't go to that level. Maybe we blow past it, get to 80, 79, and get deep into the 70s, maybe even into the 60s definitely a possibility. Good to have a plan for that. But I feel like there's just so much like bearish sentiment right now, whether that's in the stock market in general, Bitcoin. From what I understand, there's been a lot of people selling. Oh, if it's breaking into the 80s, I might as well sell. I'll buy back in the 70s. Those people might get left behind. I've been a person that was waiting for a specific level to be hit, and I got left behind. So my average could be much lower. My position could be much larger, but I think it's a good lesson to have with Bitcoin. You see these levels down here, even 79. Maybe that doesn't get hit. Maybe the low's in and that we start to make new all-time highs before we get into a bear cycle, next year or whatever. Maybe we get back to these levels then. But between now and the top, that could be it. So I think it's good to be keeping that in mind. Although, based on the drawings that I have here, we do have, this yellow downtrend that I have drawn that acted as resistance over here, then later as approximate support. But we got a fake out break below it here. Then we got a nice bounce. And so maybe what we're seeing here is just like over here, where we saw one candle below it, close below it, and then we see the next day reclaim it. And so maybe that's what we're going to be seeing today, as we did pull back to the 382 from this, Fibonacci retracement that I have drawn there. So, I am looking for this to start to move higher. But if it does not, I am going to be ready for 80,000, 79, and potentially 72, or where's this shaded box begin? That's around 74,000. So definitely good to be having a plan for this. And to be honest, I was just talking with a friend yesterday about, they were joking around, texting me saying, oh, Bitcoin to zero. And I was like, no way. But I mean, if this does get into this shaded box, gets down to like 69,000 just for fun, personally, I'm going to start to go more heavy there because there's all of this support over here. And I do think that we are still in a bull cycle, a bull phase, and that this will be seeing new all-time highs later this year. So that's my thesis, but I'm personally not going to be putting money into this that I want to see between now and the time that I plan to retire. This is my retirement fund. So I would only be taking advantage of this dip if I plan to put that money in for decades, so that is my time frame with Bitcoin. So good to trade on your time frame. But anyways, spend enough time on this. I'm going to go over URA real quick. I feel a little bit disappointed with this because, I was thinking about buying the dip, but then I was looking at Oklo because that just looks a little bit stronger. And also, I just think it's a little bit more exciting. There's a lot more activity with it. So I was intrigued by that. I did actually place some orders on Oklo, but they did not get filled. But we did see this, wick down on the 25th with this large volume. Makes me think that, maybe buyers are pushing this up, holding it above $25 a share, as we did close on the 25th at 25.18. But with the green move from yesterday, we are getting rejected, it looks like, from this yellow downtrend based on those 3 pivot points. You can see there that downtrending parallel channel. So maybe what we're seeing is a little bit of consolidation before we do continue lower, potentially to right around 24.50. But the low from the 25th was 24.66. So maybe that's just me getting a little bit greedy, wanting this nuclear, uranium, whatever, to be coming a little bit lower. But, it is a little bit encouraging that we did see a wick up and potential rejection there as we did close. And I should mention that this is the ticker symbol URA, the Global X Uranium ETF, which closed yesterday at a price of $25.71, being up just over 2% on the day. And it looks like it's continuing up about 2%, about 50 cents in the pre-market. So if we do flip over to the 10-minute time frame, it does look like it is just floating up very nicely from that low of 24.66. And it looks like we've hit a high in the pre-market of 26.22, but we are still below that 618 retracement, which is around 26.35. So flipping back over to the daily, It does look like, though, we are above that yellow downtrend, trading above $26. So we are above there, but maybe we gap up and then get rejected. So yeah, I mean, I think it's a very intriguing position to be in, which I am currently not, whether that's uranium or nuclear. But I also think it's a good idea to not chase. And so I'm trying to be disciplined and not chasing this, and also not chasing OKLO, Oklo, which did close yesterday at 35.19, being up almost 10% on the day and continuing up about 10% in the pre-market. So yeah, I mean, I talked about wanting to buy the dip yesterday. I think I placed an order for a couple buys at like one at 33.15, one a little bit lower, maybe at 32. But we saw the low yesterday of 33.57, so I missed out on that opportunity because we are continuing up in the after hours and pre-market. It looks like just a very nice float up from the low of 29.82 that was hit on the 25th. Breaking below this golden pocket here and then going higher. And so, if one would have bought the dip in that golden pocket, you'd be up over 20% right now. And let's just see. So the current price is at 38. The current high is around 38.88 from the pre-market trading. And if we do consider that, looking over at the daily, what was the high from yesterday? 36.48. So we are gapping up potentially. And so, yeah, I'm just thinking, what's the potential upside from, let's see, 39, right around here where the cursor is. Actually just a little bit low, 39. What's the potential upside to get to just that 1618? It's about a 40% move still. And even if we just get to that moving average, that's about a 15% move to the upside. So still, I think that there is some very nice potential with this. But again, I am trying to not chase. I might adjust my buy orders, hoping that they do get filled today, or maybe I'll adjust one of them, but I don't think it's good to be chasing, and so I personally am trying to be disciplined. But yeah, I mean, I think there's just a lot of potential with this, so good one to be keeping in mind. And since James was mentioning Unity Software, I will go over that one first, and then I'll get into the other tickers. And Mars, what's up there? How's it going? Good morning. You're excited at what I have to say about Wolf? Cool. So I'll go over Wolf then after Unity Software. And so for me, what I personally have done with Unity Software, also with Wolf a little bit, but just on a much smaller position size scale. So with Unity, also with Wolf, I think that both of them are really in like deep value, like technical breakout potential levels. And yeah, I mean, I just feel like looking at the chart of Unity, I had a shaded channel going back some time, but really I just kind of adjusted that to be this downtrend. We're, getting to potentially breaking out from that. So what I could see is this consolidation that I have doodled up here. But with the pullback that we have seen, it's a little bit more aggressive than what I have drawn up here. But I think that it's just a dip buying opportunity. And so for me personally, what I've done, I think I was at work when it happened. I had a bunch of calls on Unity. I took profits at 100%. I could have taken profits at 200% in the following day, but with options and stuff, they most likely will be going to zero. So I'm just trying to be conservative with taking profits with those. And so with Unity Software, I think this is still going higher. And so I actually added to some of those call positions yesterday, just one contract each, so nothing too crazy. But looking at the data from Unusual Whales, I think that this pullback that we're seeing, is in line with this doodle that I have here, consolidating below these levels, below 28.67, which was this prior high over here. But, I guess my doodle is above that level, so I shouldn't say that, consistent with what I have doodled. But below that downtrend, that longer term downtrend that has been resistance. And so I think that, it's totally normal for us to be pulling back below that. Surprised to see it pulling back so much, but I think that's just dip buying opportunities. And so I should say that Unity Software, ticker symbol U, did close yesterday at a price of $26.51, being up 3.35%, being at a discount from the highs when we got rejected from that downtrend, being down 14% from those highs, but it is up about 1.66% in the pre-market, trading around $27 a share. If I do look over to the 10-minute time frame, we can see, yeah, this nice right up. I think this is a dip buying opportunity pretty much across the board, whether it's Bitcoin, S&P 500, stocks, other than Lucid. I think it's dip buying opportunities. So let's look over at the Unusual Whales options data. And so this is what I was going over with Lucid. I'm going to go back over to the contract lookup. And I don't have anything in my bookmarks, but I do have something in my options theses list here. Just going to sort that alphabetically so I don't get confused. And at the bottom of it, you can't see it. But some of the contracts that I personally am trading, one is the $42 call that expires in June. This is a little bit risky because looking at the chart, I don't necessarily think it's going to be up to around $42 by June, but it could be, the doodles that I have here, maybe suggest that. And then that would be forming the head of the inverse left shoulder, inverse head here, inverse head and shoulders pattern. That would then suggest a following pullback, maybe like this, that would be the second half of the year. And then we'd have a move potentially up to like $75. So I think that just looks really, really good. But thinking about this getting up to $42, $45 by June, I think that's a little bit risky. For me personally, the reason why I'm interested in this one is just because the premium's a little bit cheaper, right around $1. And personally, full disclosure, yesterday I did add to my position at the low from yesterday of $1. And then the other contract that I'm also in, it's a little bit more ambitious with a strike of $65, but it has an expiration in January of next year. The low yesterday was also $1. Spoiler alert, I also got a contract there for this one, which is bringing my average up, but I just plan to be more aggressive in trimming as Unity does go higher. And I should note too, I do have some shares, I believe just 7 at around $22 or $23. Actually, I do have one in my Robinhood account. So I have actually 8 shares. I don't really plan on selling those because I'm swinging the calls. But anyways, not to endorse these contracts, what I wanted to get into is the data over here, the net call premium and put premium. So I'm just going to expand that. And so looking at this, what we can see in the data, the bearish bullish slider, I'll just jump to that right away, 60% on the bullish side. So that is looking good. And then so just to break it down here, what we can see is the stock price in yellow ran up and then floated across over here after going up, but then pulled back a little bit, cooled off a little bit. And I think a lot of stocks actually did that yesterday. And I think that is probably following the tariff news on, Europe. And so there's a little bit of an unease in the markets there. So that's why I think we saw a cool off. But I think overall, we're in dip buy mode across the board. What we see in the net put premium is that was more or less flat, or at least relative to the net call premium, which we saw go up considerably. And then we also saw the volume here. And I'm actually just going to do a little comparison with the stock chart. With the volume, we saw 13.46 thousand. And then so if I look at the chart over here, what was the volume for the day? That was 4.55 million. Okay, so this is something different. I'm still learning, how to read the volume here. I think that is for contracts, and this suggests more buying, but we actually want to look into the individual contracts to get a better idea of that. And what we can do, and this also comes back to, this video that I did on the multi-million-dollar Soundhound's unusual whale, and also the video I just put out on Lucid Motors. What we want to be doing is looking at individual contracts so we can track the big moves. And so I have to give a shout out. Actually, sorry, I'm going all over the place here, but I have to give a shout out to the Bronx Viking. He has been putting out a lot of posts on Unity software. And this is one that he was tracking a huge $1.1 million order for June's $27 call strike for Unity. And so that June OPEX keeps getting targeted for calls. Does that sound familiar? He's suggesting Roaring Kitty is in on this. So what I try to do because of his tweet here is I want to kind of identify contracts based on the data that I am seeing. And so looking at this, I want to see, what's this spike here in that net call premium? And so looking at, the premium at around 10:18 in the morning, we saw a net call premium of around $756,000. But then just a few minutes later, we saw that spike up about 5 minutes later from about $60,000 up to 1.8, almost $1.9 million. So that's a pretty big spike. And so we can look up that contract to see what that is. Is that opening a position, closing a position? Is that adding to a previous position? Is there a bull going long here? And so even though looking at the chart, we are up a lot from these trend lines, is this a dip buying opportunity or a panic sell opportunity as we get back to fill the gaps down here? And so let's look at the data from that. But I should first also take a step back, look at the 30 days here. And so we can see lots of calls going up here. And so maybe this is, not so unusual what we're seeing here with the 3 million spike in premium, nearly 3 million spike in premium from yesterday, because a few days ago, so on the 20th, we saw an increase in net call premium of over $10 million. So is this really that unusual? From the one day, with the net call premium going up by $2.71 million versus net put premium going up by only $213,000. So the way we're going to do that is go over to the flow feed. So if I just go over to Unusual Whale's home screen, go to flow data here, and then go to flow feed, I'm actually going to clear the search here. So we're not looking at Lucid. And then I am going to look at the time range for yesterday. So all of the data from yesterday. And then I am going to type in Unity up here. So we see any data that we have, all of the data. But then I am going to, limit this going over to this. Oh, this is Lucid, so I don't want that. The Unity software, sorry about that. So we get a spike. So this was from, hundreds of $1,000 spike there. So let's filter the premium right here, well above Ed's head, so he's not blocking it. So let's put that at 10, 100, 000, $100,000. And so what we can see here is some calls that had premiums, wow, $1.14 million, and then these being in the hundreds of thousands of dollars. And so let's look at what Bronx was saying over here. So this is a June $27 call. Do I see that over here? I see, yeah, so this is the one that he was talking about. June $27 call, $1.14 million on that. So let's expand that contract to look at the data. And so what we can see, looking just from the one day yesterday at the time range from 10:20 to 10:25, we saw the candle premium of $1.1 million. And so from yesterday, we had a volume starting the day of 7.8 thousand contracts open. We saw a volume yesterday of 2.7 thousand, which led to an increase in open interest of 1.2 thousand. getting open interest to above 9,000. So looking really good there. If we look back over the past 90 days, this is the most volume that we've seen on it. This is the opening of contracts. But if we do scroll down here, I'm not going to get into it because I also want to get over to Wolf. But we can see here that there was previous positions that were open, and I can actually scroll back a little bit. Yeah, I mean, it's been like 8,000 for some time. And so anyways, looking at this, I think this is just bullish. I think that this is suggesting stock prices going higher. And so then looking over here at the next contract, this is the $25 call, which expires in September. So that is September 19th of this year, over 200 days between now and expiration. And this was a premium of over $300,000. So let's click on that one. And so what we see here in the data down below, not as exciting. It's not $1 million like the other one. But yesterday we saw an open interest of 5.3 thousand contracts, saw a volume of 910, but that only led to an increase of 142 contracts, going from 5.3 thousand to about 5.4 thousand. So this contract not as sexy as the other one, but that's not really to be surprised because the first one that we were looking at was this spike over here where we saw the big move in that net call premium. And so this one that we're looking at is a little spike here. So not as impressive, doesn't have $1 million behind it, but either way, these are bullish. So I think that is good. And then let's see, this next one is the $32 call, which expires in May. So a little bit shorter dated, a little bit more risky. Let's click on that one and we can see the spikes in the buys and or sells of the contracts from yesterday. And so what we saw yesterday was an open interest of, let's see, 4.2, almost 4.3 thousand contracts open. We saw a volume traded yesterday of 1.8 thousand contracts, which led to an increase by about 130 contracts. So going from 4.2, almost 4.3 up to 4.4 thousand contracts open. And so, that's bullish, but it's not super bullish. There was just a lot of day trading with this contract yesterday is what it tells me. But it is still going along. The open interest is increasing. And then the other contract here, sorry about that little blip in my speech, but that is a $25 call again, same strike as down here. So, we've already looked at that, so don't need to spend any more time on it. But yeah, I mean, this is just saying that with Unity Software trading below $27 a share, this $27 call with the June expiration, that's coming up. But it's not terribly risky because it's just a bet, basically, that we're going to break out from this long-term downtrend and could be heading even higher. So it's super bullish. I really like it a lot, and so hopefully that's helpful for you guys. Yeah, I'm excited about Unity. But I should note, too, that the premium for these contracts, like for this one, the one that had millions of dollars traded on, the premium is like the low of $4 up to like $4.65. So it's like $400 per contract. So, it's kind of risky. Whereas the contracts that I am more interested in, they have a premium, like I said, of around $1 or $100 to buy one contract. So a little bit more conservative there as far as the money you got to risk, but much less likely to be closing in the money. But it's quite possible based on what's going on with the chart that they get up at least towards around $45. So yeah, I mean, I'm just super excited about Unity, and so maybe I'm going to have to put this out as a clip. And so with that being said, I'm just going to throw this up here. If you did like the video, me sharing my thoughts, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more content like this. But I need to get into more charts. I got about 12 minutes before we hit the hour, and so I wanted to get into Wolfspeed. Let's talk about that. This is one that I had a call, sold a call. I kind of called the top over here. I was a little bit early, but I just got to, do a little bit of self-promotion. I put out this video here, Celsius and Wolfspeed volume price analysis. That video only got 68 views. And from that volume price analysis, I suggested that Celsius would continue and that Wolfspeed would be pulling back. And so I was a little bit early in suggesting the pullback. I think I was suggesting it over here. So the stock price did go higher. I thought I was wrong, but it did pull back. I was effectively suggesting this doodle would happen, that it would be pulling back to this 618 as well as this uptrending purple line. And so that's what we got. We just went a little bit higher before we got back to there. So I personally reestablished that call position at a cheaper price than I had initially gotten in at. And so I think that from here, from the 618, from this purple uptrend, excuse me if I said downtrend, I think that could be acting as support. And I think that we kind of got a little bit of an ugly inverse head and shoulders, kind of at a slant there. Although this low was, not as low as this one. We didn't get to fill that gap, so it's not an inverse head and shoulders. But I think that we have some potential support here. I think it's looking really good. And before I get ahead of myself, I should note that this is Wolfspeed, ticker symbol WOLF, which closed yesterday at a price of $6.14, being up about 7% on the day. In the pre-market, it's up about another 1%. As we see here, we are potentially holding that 618 around 580 as support, as well as this purple uptrend, which is probably a little bit arbitrary. I didn't lock it into place, so it could be fudged to, having a pivot point from down here. But I'm compelled for whatever reason to think that that might be acting as support, because it supports this thesis of the 618. But I should say, actually, take a step back. I need to adjust this. To be getting up to that high. So now I'm going to lock that in place and make sure that the high is at 767. So marked right there. And, while we did go lower than the 618, if I add the 65% retracement, that is the golden pocket. So some more, levels there. And then if I add the 786, I think it's good to be prepared for the possibility of this going to around 550. So for me, I like to have my options contracts well dated into the future, either 6 months or more than that into the future. And so I believe the call that I got is one that expires in January, so playing it very safe. But yeah, just taking a step back, we have this massive downtrend, thick line there that has been acting as resistance going back to the highs at the end of the year of 2023, multi-year downtrend acting as support, or really I should just say a full year downtrend acting as support. We have broken out of that. So I think this is just looking super awesome. For the long term or a short term swing, however you want to play it. And hey, Sandy, good morning. Nice to see you. It's been a little while since I've seen you in the streams here for pre-market prep or Ticker Request Live. So good to see you. And I have to say, I will be doing a follow-up AMC video tomorrow after I get off work because it's been 2 months with that 2-month thesis. And so I am excited about that. But yeah, I'll be putting that out tomorrow. And then also, going over Wolf now for Mars. So happy to be doing it. But, I wanted to look over at the unusual whales data. I think it's going to show a lot of similar data like what we're seeing with Unity software. And so like I had mentioned, the call that I have been keeping an eye on, I did swing it for some profit earlier. I don't know how much I made, maybe 20%, I forget. I actually just sold it maybe at 40%. I was hoping for a 100% swing, but, coming back to this video, I put out this video, it's like, I got to put my money where my mouth is. If I think it looks like it's topping, I'm taking profits. And I think probably before I put out that video, I had exited my position. I could have made more money, but that's just the way it goes. And so coming back to this, that contract that I had swung was the $20 call with an expiration, very boring, out about a year from now, January 16th expiration. And so we can see yesterday there was one volume, very boring buy at a price of $73. And you can guess who the person was who bought that one boring little contract at $73, or I should say premium of 73 cents times 100 shares is $73. So that was me. Full disclosure, I think I had an order placed at open and it got filled, and it's like, man, maybe I could have done it at 69 because that's funny, but I didn't do that. So anyways, I don't care about this contract or whatever. You do you. This is just my style. Premiums less than $1, add into positions with about a year to expiration. I like to play it safe because I'm learning contracts. But let's look over at the data here. Just going to expand this just like I did with Unity. And so getting ahead of myself a little bit, we can see the bear bull slider here at, let's see, 51%, just barely majority for the bulls, but with that neutral, we do see that there is majority there. This is not as clean of a signal or as clear of spikes, whatever, like what we're seeing in Unity software. So I'm not as confident in as bullish with this one as I am with Unity, but, just looking at the chart, that breakout from that downtrend, I think long-term, this is going to be a great play. It's also an AI or a semiconductor play, I believe. So it matches, what's going on. I think this is a buy the dip one. But anyways, what we see in the data here, the yellow stock price kind of, waxing and waning around the zero, comes a little bit negative, but then ends the day positive. Volume here, we see it being kind of indifferent. So kind of tough to say what's going on with that. We see net put premium coming down. And then net call premium going up in green there. And so looking at the numbers here, we see net put premium come down by $37,000, whereas net call premium going up by $50,000. So, it's not huge money here. It's not millions of dollars. So nothing for us to be getting super excited about. But if I do take a step back, look at the 30 days over here. Yeah, again, this is nothing to really be going on about. I think that if I looked at the flow, I wouldn't necessarily see anything too exciting with Wolfspeed. Maybe that's just because it's, a smaller name. It hasn't really been picking up attention yet. To be honest, that's a good time to be adding, to be establishing, positions and stuff. So, I'm really excited about this, but because I'm not going to look at the flow with Wolfspeed, what I can do, just coming over here to the Ticker Explorer or the whatever this is, diving into the data over here, we can come over to look at the Greeks, to look at the max pain. So what is the max pain for this coming Friday? So tomorrow, the 28th, that is 650. And where are we trading at? We're below that. We did get above it to that high of 767. So maybe it's a little bit not so good that we're below 650, but if we get a move towards and close above 650 tomorrow, I think that's looking really good. But I think that we could start to see a little bit of a cool off over the rest of this week and next week, because next week, max pain is also 650. So if we're seeing dips, those could be opportunities because the max pain on Pi Day, March 14th, is $6 a share, and that is currently lower than current price. So if we're closing well above $6 a couple Fridays from now on Pi Day, that could be, when we start to see some moves to the upside. So yeah, I think this is the time, in my view, you do you, but the time to be accumulating when it's boring, when it doesn't have that much attention. And then when it starts to get like Unity, that is when it's time to start trimming or, be, maneuvering in one's position. But, it is getting to right around the hour, so I might not spend too much time on Airship AI, which is ticker symbol AISP. This closed yesterday at a price of $4.47.5, being up just about 6.5% yesterday and continuing up about 3.5% in the pre-market. And so I had drawn this yellow uptrend that looked like it had been acting as support over here. I suggested around here in a video that I did on Airship. So let's see, when did I put out that video? Let's see, over here. Airship AI got over 100 views, only 101, so I think that's pretty good. But, I kind of break down my analysis. That was about a couple weeks ago. And so I was thinking, man, maybe I'm wrong. It's not going to be pulling down to these levels that I was talking about. And, I'm going to get left behind. No big deal. I'm not going to chase. And so I'm actually going to clean up and just making these thicker just so I don't waste too much time on them. And so, yeah, we've broken below the 786. So I don't really think there's too much for me with this retracement there. we do have this bigger picture retracement, and this just looks beautiful, I must say. Going to make that a little bit thicker, and then I am going to adjust the proportions since we have broken below what looks like is the 50% retracement there at 478. Clearly being below that, I am going to remove that, but I will keep the 618, and I'm going to actually add the 65% retracement. That is the golden pocket. And so it looks like, I mean, we kissed on the 25th, we kissed that 618, hitting a low on the day of exactly $4.10. So, maybe I didn't even want to add that golden pocket there, so I'm just going to remove it there like magic. And so looking at that, I think that this is just kind of a fake out breakdown of that uptrend, and that we will be reclaiming it. I think it's looking good, and that's probably because I think I saw some unusual whales data yesterday that looks pretty good for Airship AI. And we also, I should note though, we do have the 200-day moving average still below us. That is actually at a price of $3.66. So we could be going down about $1 more. So good to be prepared for that. And with that being said, maybe I should just, being cautious, I should add the 786 over here. And so that's around 313. Actually, I'm not going to do that. I don't think we're going that low. I think that what we're seeing here is a dip buying opportunity. And so let's look over at unusual whales to look at that one. And so over here, I'm going to look at the contract lookup. And so this is not my options theses list because, I haven't really taken too active of an interest in it, but I do have a contract over here in my bookmarks. And so this is for the $12 call expiring in January. So again, pretty boring how far out it is in time. There's really not much open interest on this contract, only 31 contracts. So maybe it's a little bit risky in that sense. And so why did I pick the $12 strike? What do we see over here? About $7. So yeah, maybe that's not a good contract to be trading, but effectively, why did I pick $12? We see, I believe, around the IPO or something that was around 10. Maybe it was a DPO. I don't really know, but around $10. I think that's going to act as resistance. But we do see the all-time high 1432 that was hit on March 19th from a year ago, but the high over here from April 4th, right around $12. So that is why, I picked $12 as a strike. And so that high was at 1170. So I'm just going to lock that one into place. And that's a level that I think that we could be going into. But let's expand the chart over here, the premium data, so we can see lots of volume, it looks like, coming on the downside, being negative there. And so what's going on with this one? We see that the stock price was low. It looks like it gapped down, but then went up higher, kind of consolidated before pulling back a little bit, effectively being flat on the day. And it looks like it gapped up a little bit. And then, went higher. So yeah, I'm just the way that it's drawn over here. It's, just relative to, the numbers over here on the y-axis there. So take it with a grain of salt. I'm still learning how to interpret these. But what we see, net put premium in red is more or less flat on the day, but we see net call premium being negative. And so what we see is net put premium is 349 contracts. Positive net call premium is negative 3.36 thousand. So again, this is not like super crazy, no big whales on this. If I scroll down here, we see the net call and put premium, the bear slider over here. Sorry, I've been doing this too long. I need to end the stream here in a minute. But what we see is that this is net bearish. So take what I'm talking about here as a grain of salt. I do not have a position in this one. If we take a step back looking at the past 30 days, we do see some pretty big, interesting moves from, it looks like, February 18th. We saw a net put premium down 48,000, whereas net call premium went up by nearly 300,000, not millions. So take this all with a grain of salt. But if I do go over to, let's see, the flow feed, I'm just going to escape this, clear this, what I had on Unity, and then I'm just going to do the time range for yesterday. I think I saw something that was pretty interesting for AISP. And yeah, so for this one, I am going to adjust the premium maybe to like 10,000. Actually, no trades there, so let's just boost that to 2,000, or sorry, 1,000. And so we do see that there were some trades yesterday, thousands of dollars, and maybe actually I do want to expand this to what was I seeing over here going back to February 18th. Was that bearish or was that bullish? So I am going to adjust the time here to actually be from February 18th to yesterday. Let's apply that. And so now we see these horizontal lines that separate the dates, and I might adjust the premium slider over here. That's actually interesting. It only shows us one from yesterday when there were previously some more. But yeah, the premiums over here, we can see that there was 2,000 from yesterday, but what we want to see is the ones over here from the 18th. Yeah, we're getting into bigger money, hundreds of thousands of dollars. And so the largest one that was traded was this 153,000. And so that is the March 21st expiration for this year. That's the $5 call. So let's look at that contract to see if that is bearish or bullish. And so what we can see, if I expand this back to, let's see, 7 trading days, that does include the 18th. Miraculously, it happens to be the 7th day going back in time. We can see that big spike in the call premium. And so scrolling down here, actually, maybe I want to do 7 days over here, and we can see that big buy, and or maybe it's a sell. I don't know. We'll have to look at the data. And so going back, scrolling down here, got to move Ed. I'm sorry if he was blocking that. Dang it. I've actually got to remove him if I'm planning on talking about options. But what we see down here is on the 18th, so getting over to here, we see on the 18th, we saw an open interest of 264 contracts with a volume of 5.4 thousand volume there. And that led to an increase in open interest of over 4.1 thousand, going from 264 contracts to 4,000, almost 4.4 thousand. And then we see following that the open interest has gone up and down a little bit, but then on the 21st over here, we saw the open interest was at 4.3 thousand. Volume on that day was 1.6 thousand, which led to an increase of 1.2 thousand, going to an open interest of 5.6 thousand. And currently, we're well above that with an open interest of 5.9 thousand. So while these trades were not millions of dollars, so this is definitely more risky than the Unity ones that I was talking about, than the, the Unity and the Lucid video that I just put out. Definitely more risky because it's not as much money, but this is hundreds of thousands of dollars. So that's a pretty good amount. If we do take a step back to look back at all of the data, maybe there were some buys in the past. No, I mean, this doesn't even go back 90 days. It doesn't even go back 45 days. So looking at effectively all of the data going back 30 days, we are seeing some pretty big buys. And so I do think, well, much more speculative than Unity, than, the other charts that I've been going over, this could be a dip buying opportunity. So pretty cool there. But since I have been streaming for, just about an hour, I started a little bit late. I am going to get shutting this stream down to get ready for market open in about, 23 minutes. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching and have a great day trading. Looking forward to seeing you